PSX breakdown. The Pakistan Stock Exchange kicked off the trading week with a highly resilient and technical consolidation phase, as local benchmarks successfully absorbed early corporate updates amidst ongoing structural benchmarks tied to the international monetary framework. Following intense selling pressure that closed out the prior week's trading cycle, the market displayed visible signs of stabilizing at the opening bell. The benchmark KSE-100 index witnessed highly calculated, range-bound price action throughout the session, oscillating between an intraday low of 173,636.45 points and an afternoon high of 176,129.35. By the final closing bell, the KSE-100 index managed to post a modest positive variation, advancing 124.95 points, or 0.07%, to settle the day at 175,927.73 points. Concurrently, the Sharia-compliant KMI30 index experienced slightly stronger accumulation, climbing 492.98 points, or 0.20%, to close at 247,816.35. However, broad market breadth leaned heavily towards selective consolidation, as the KSE All-Share Index contract recorded a minor downward adjustment of 148.49 points, or 0.14%, to finish at 106,419.79. Total traded volume across the KSE All-Share platform expanded securely to 671.14 million shares, accumulating an aggregate transaction value of 30.19 billion rupees. Data tracking from the National Clearing Company confirmed that the daily volume landscape was heavily shaped by local institutional investment, or LIPI, flows. Local mutual funds and insurance providers executed highly selective rebalancing strategies, efficiently absorbing liquidations from specific retail clusters ahead of the upcoming corporate reporting cycle. A detailed isolation of major sector indices beautifully illustrates the rotation of capital that preserved the index's positive placement today. Commercial banking firms stood at the absolute top of the leadership matrix, acting as the primary fundamental engine keeping the KSE-100 afloat. The banking tradable index advanced 0.30%, or 149.09 points, to finish the session at 50,085.20. Buying volume clustered tightly around blue-chip banking conglomerates, supported by long-term institutional confidence in their solid net interest margins and robust balance sheets under the State Bank of Pakistan's restrictive monetary stance. In sharp contrast, the energy extraction complex faced technical headwinds. The oil and gas tradable index edged marginally lower by 0.04% to close the day at 34,742.62. as global crude asset fluctuations prompted portfolio managers to pause aggressive accumulations across exploration and production counters. Concurrently, heavy manufacturing sectors faced a highly mixed operational atmosphere. The cement and fertilizer complexes saw selective liquidations as corporate allocators factored in sticky input cost dynamics driven by structural electricity tariff adjustments and gas supply revisions. Portfolio strategies remained strictly defensive, favoring massive cash-rich conglomerates over heavily leveraged secondary-tier industrial operators. Moving away from sector aggregates, individual corporate filings on the exchange portal provided major directional catalysts for active equity managers. Fauji Foods Limited captured significant corporate attention after officially distributing a formal notice of its upcoming board of directors meeting. Scheduled to finalize the company's half-yearly accounts for the period ending June 30, 2026, allocators are tracking this release closely to evaluate the sustainability of recent margin improvements within the FMCG sector. Parallel to food logistics, structural diversification updates injected significant optimism into the textile and manufacturing space. Reliance Weaving Mills Limited released a material disclosure detailing its formal expansion into home products and high-end home textiles. This strategic diversification initiative drew praise from institutional analysts, who view the move as an effective measure to insulate core revenues against cyclical domestic textile exports. Conversely, structural closures locked down specific tickers in the energy and power generation sectors. Engro Powergen Limited announced that its board will convene on July 30th to evaluate financial statements and potential entitlement distributions. In full accordance with the PSX rulebook, a mandatory closed period has been formally established starting July 21st, legally barring all executive directors and core managers from trading the company's equity shares until the financials are fully public. As we map out trading configurations for the upcoming sessions, tactical market execution demands a strict compliance with critical chart boundaries. Technically, the KSE-100 index remains cleanly positioned within a broader consolidation pattern, with the 175,000 horizontal support zone expected to serve as the immediate structural floor against localized volatility. Next week, portfolio risk managers must carefully evaluate corporate accounts out of Mirpurk's sugar mills and other primary commodity counters, as incoming financial metrics will directly test if operating cash flows are expanding fast enough to absorb high structural tax rates. Furthermore, tracking macroeconomic indicators like foreign institutional investments, FIPI, will be essential to see if international funds are increasing their allocation weight. We advise maintaining a highly disciplined, yield-centric portfolio allocation stance. Continue to collect high-conviction dividend plays within the commercial banking sector while ensuring an elevated cash buffer to aggressively exploit temporary value hunting windows across high-cap engineering blue chips. That concludes the Pakistan stock market update. We will see you at the next opening bell.